Hello, Philippine Startup Week. Good evening. My name is Marian, and we would like to welcome you to Embiggen Consulting's community session called Deploying Venture Capital to Support Corporate Innovation. And let's begin with some context. The COVID-19 pandemic has undeniably pushed traditional businesses to adapt digitization. At the same time, a record of 939 deals and $4.4 billion were invested in Southeast Asian startups in the first half of 2021 alone. Conglomerates are also getting on this and are boosting investments in technology startups. In this session, we will explore how corporations supported their corporate innovation strategies and how deploying venture capital to invest and work with startups can help companies push it even further. So for the next 20 minutes, I will be presenting a short keynote to discuss some trends in the area. And after that, we will be joined by our distinguished analysts, which I will be introducing later this session. So with that, I would like to begin sharing my screen. Right. So just to give a little bit of context, prioritizing innovation today is the key to capturing post-crisis growth. And we've seen that in our role right now. A lot of companies have adapted to the COVID-19 pandemic and right now have been strategizing on how to pursue innovation despite the limitations, from companies adapting to e-commerce to mobile payments and all the other digital wallets available in the market. At the same time, successful innovators invest in building sustainable strategies, processes, and systems for innovation. This goes from the startups that we see in the country, even to the biggest conglomerates around the world. So innovation in itself is a management discipline. And for us to be able to run sustainable business in the long term, it has to be incorporated into our strategies for the long run. So my name is Marian Camacho, and I am part of Embiggen Consulting. It's an international corporate innovation strategy and foresight consulting firm committed to building meaningful growth for progressive organizations in emerging markets. We are powering you with knowledge and expertise to help you navigate through the new normal, leverage our blueprints to future-proof your organization, build organizational resilience through innovation and digital transformation, and develop your culture of corporate entrepreneurship. And I will begin this session by talking about COVID-19 and the digital transformation that happened during the said period. So COVID-19 has speeded the adoption of digital technologies by several years, and that many of these changes could be here for the long haul. In Asia, that number is actually 10 years, while the 7 years is actually more for a global trend. In the Philippines, the COVID-19 pandemic underscores the importance of digitalization for economic and social resilience. Before the pandemic, we were sixth in digital adoption in Southeast Asia. We had the fourth highest internet cost in Southeast Asia, and back then, only 10% of our population uses the internet to pay for bills or shopping. But as we've observed, the COVID-19 definitely pushed this forward. But there are clear signals that digitization is not just a short-term thing, but a long-term strategy that needs to be adopted. First, the Philippines aims to be a prosperous middle-class society free of poverty by 2040. With the government's strategy of Ambition Natin 2040, they're targeting the life of all Filipinos for the next 20 years to be matatag, or strongly rooted, maginhawa, or comfortable, and panatag, or secure. This is the same framework that will be guiding the Philippine development plans until 2040. Second signal is the Philippines is potentially a significant player in the global digital market. Filipino internet users grew from 23 million in 2010 to 73 million Filipinos by 2020. And this is because of the prevalence of mobile gadgets and the affordability of mobile gadgets. Also, Filipinos spend about 10 hours on the internet every day, with about 5 hours being using for online browsing and about 4 hours for social media, the highest worldwide. And then lastly, of course, we cannot discount the size of our population, with a domestic market of over 105 million consumers rather. And then the last signal that I'd like to share is, despite the pandemic, and even before the pandemic, the Philippines already registered a strong growth in gross value added to the digital economy in the past decade. From 2012 until 2018, the digital economy grew, the value added of digital economy to real GDP grew from 6.9% to 10.1%. In the same period, it posted a double-digit growth, averaging 30.3%, and the real gross output of the digital economy nearly doubled in 2018 compared to 2012, with an average compensation of digital economy, which is about 50 to 60% higher than the total economy. So what does this all mean? Digital adoption is no longer a want, it is a need. And we've seen startups address this. We've seen a lot of news recently about million dollar deals from Santina raising a $2.2 million round to Adoption investor Foxmont helping prop tech startup AHG raise $1.1 million. So this trend is here to stay. And if startups are doing this, I think it's also important for us corporates to also address it or be part of this movement. So let's now talk about venture capital and corporate innovation. On the flip side, companies mostly run into problems with sustaining innovation momentum because of so many factors, some of which include the lack of risk-taking, decision-making hierarchy, workforce employee mindset, and the notion that failure is taboo. This means that while some implement open innovation policies, most still struggle to find the next big disruption internally. And looking globally, many of the top global corporations have kept their growth intact because they have kept robust innovation programs. From these corporates cooperating and collaborating with the top startups to remain innovative, and collaborating and investing in them, so that, and even in some cases, even acquiring these startups to drive growth. It is by innovating that these corporations remain relevant and competitive even in today's world. So one of the best ways to really drive innovation is to create a venture capital fund, which keeps and establishes an ecosystem of innovation to keep companies thriving. So why the need to pursue corporate venture capital? Well, let me enumerate three main things. One is it helps increase sales. With corporate venture capital, conglomerates can invest in startups that align with their core business and create synergies to boost sales and profits. Second is it can also help them enter new markets because these startups might be in market where they're not yet existing, and it can help them enter into this new market or even expand into a new vertical. And then lastly, it's about generating new revenue. Organizations can also invest in startups to diversify their investment portfolio so that they don't have all their investments in just one vertical, generating multiple streams for their conglomerates. And then another insight that we've gathered that in 2020 alone, CVC funding actually soared to $7.1 billion, which is about which reflects a 24% growth. Global CVC backed deals fell for the first time in more than 5 years, from 3,416 in 2019 to 3,359 in 2020. But this is primarily because of the initial uncertainty brought about by the pandemic. But despite that trend, mega rounds or deals amounting to more than $100 million reached an all-time high of 182 in 2020, which is a 48% increase compared to the previous year. In Asia, it actually saw a recovery of CVC-backed funding, rising to $22.1 billion, which reflects a 33% annual increase compared to 2019. And then locally, we also see this happening. We've seen family offices, corporate VCs, and other conglomerates, and even private individuals invest in Filipino startups, whether it's Italy's $1.6 million seed fund, which was co-invested by Ayala Ventures and Luxury Shipping, $1.6 million NextPay seed round, which was co-funded by Gentry and Kickstart Ventures, Plantila's $2.2 million seed, Edamama's $5 million pre-Series A, Great Deals at $30 million Series B, and also the undisclosed Series B by Kumo. As you've seen here, conglomerates in the Philippines are now investing in startups. And this is a trend that we believe will be here in the long run. But despite that, however, creating VC funds and developing fund management teams can be challenging because it requires three main things. One is you need to have a good source of investment deal flow. And sometimes conglomerates might not have access to this. I'm not saying everyone, but there might be some limitations for some. Second is there's also a need to balance managing strategic and financial returns. Do we invest in a startup to be able to align with our core values and core visions or core companies, to help our core companies rather, or are we investing in a startup to maximize our return, similar to how venture capitalists play their game? And then lastly, they need to enter at an early stage to drive outsized VC style returns, because if they enter too late, then it doesn't yield as much as compared if they did it earlier. And the trend right now is conglomerates adopt this venture capital as a service model to support corporate innovation strategies. Some of the benefits that include, the benefit of a venture capital as a service model is that corporations have a cost-effective structure to manage their venture capital while still helping them become more innovative. And why is this the case? First is it's venture capital style investing, meaning if you invest this much, you can also receive venture capital style returns, which is really, depending on the deals, it could be enough to reinvest back to the communities or the ecosystem. Second is it's a modern approach to research and development. Before, research and development was very manual, but now, or very collaborative in the sense that you actually have to be part of the assembly line. But now you can invest in a startup, share your innovation strategies, and also capitalize on the startup's agility at the very early stages, because it's also a source of disruptive technologies, business models, and innovation capabilities. Third is it also speaks about network and advisory, access to wisdom, guidance, and deep-rooted startup connections of the VCAS team, because these members are the members of the VCAS team is practitioners or professionals who have been in the venture capital space for the longest time. Fourth is market leadership and industry disruption, emerging value propositions to enable competitiveness and to capture market share. Remember, if you're trying to capture market leadership, you also have to work with these startups because their main purpose is really to disrupt you from the very beginning. And then lastly, it's also about promoting an internal innovation culture. And then the exposure of the startup's agility will be able to enhance our own operational efficiency and innovation structures. And this is where we'd like to also, announce that we're actually creating a new service called Venture Capital as a Service, wherein we aim to help organizations accelerate their innovation momentum by building, launching, and managing their venture capital arms. The value that we're providing for our clients is we're managing the services, where we act as your VC arm, powered by a team of experts who have worked in the startup, corporate, and venture capital space. Second is we will also provide you with a global source of deal flow, where we can connect you with promising startups from both emerging and global hubs of technology and innovation, and give you a more diverse option to pursue a certain vertical or pursue a certain market. And then lastly, it's also about maximizing returns, where we can funnel startups at different life cycles to maximize your strategic or financial returns. And then lastly, our competitive advantage is really, our startup and technology expertise, where we leverage our expertise with the team who have built and run technology startups, incubators, corporate innovation initiatives, and venture capital. Our innovation footprints also run deep in Embiggen Consulting, wherein our deep network and expertise and knowledge has roots in global and emerging hubs of innovation and high technology. And then lastly, it's our global startup network, wherein our partnerships with industry leaders in global and emerging startup hubs have been strengthened by the years of continuous collaboration among our members. So with that, I'd like to conclude my short presentation, and I will now be joined by our panelists for a short discussion. And let me introduce them one by one. And for this segment, we will now be joined by our panelists to discuss further how to deploy venture capital to support corporate innovation. First, we have Toby Claudio, the president of the Form Group of Companies, also known as Toby Sports, a group that has been at the forefront of the Philippine sports industry since it began in 1978. The group's retail arm operates a total of 67 stores under 4 specialty formats, namely Toby Sports and Toby's Arena, sporting goods and store, Runner, a running specialty store, and Urban Athletics, a streetwear and sports lifestyle store. Its distribution arm, Sports Resources Inc., is also the exclusive distributor of many international brands such as Wilson Sports, Brooks, TYR, Mizuno, Lifetime, and many others. Next, we have Roland Garcia, the CEO and managing partner and heads the corporate innovation and growth practice at Embiggen Consulting. Reading, an international corporate innovation and corporate foresight consulting firm committed to building meaningful growth for progressive organizations in emerging markets. He's a recognized innovation consultant by the Global Innovation Management Institute in Cambridge, Massachusetts, and is also a member of their think tank. Furthermore, Embiggen Consulting is a certified partner of Genie in the Philippines. He recently won the World Championship in the 2021 Winter IXL Innovation Olympics, the largest and the most prestigious innovation consulting competition in the world, along with the top business schools in the world like MIT or Yale. And then last, but definitely not the least, we have Paul Pajo, currently a startup advisor for Cognity Labs and LP for Backend Capital. He was a former head of partnerships and digital payments, business development head for Smart Communications Inc., as well as the co-founder of an 8,000 strong smart developer network community. He is also currently the co-lead for Facebook Developer Circus Manila, Angel Hack Manila Ambassador, and Startup Evangelist for Idea Space Foundation and Kubo.com.ph. So guys, welcome so much, and I thank you for your time.
Thanks,
Any words
Mario.
before we begin?
No,
Thanks,
exciting
Marian.
talk.
Hmm, right. So yeah, with that, let me begin first with running a few questions to our panelists. One is, and this is addressed to everyone, the COVID-19 pandemic and the quarantine, when the COVID-19 and the quarantine started in the country, multiple industries were caught off guard, from retail to academia to the venture capital industry. Can you tell us what it was like for you personally during the beginning of the pandemic and how your organization navigated through the uncertainties brought by the pandemic? So I guess for this one, let me start with Toby.
Yeah, thank you, Marian. Yeah, like many businesses at the start of COVID, it was really us trying just trying to find our bearings. No, obviously the situation was unprecedented, and we didn't know what time horizon to plan for. I think that was the hardest part. No, at first, I think all business owners thought this would be maybe a 3 month, 6 month thing, and then 6 months became 1 year. And then after 1 year, I think we all stopped trying to guess when things would get better. No, but what we had to do really from the start was put contingency plans in place, find ways to stretch our budgets by lessening costs, overhead, and for many, it's just been about holding on. But for those I think who did best are those who found ways to new ways to do things, and new ways to service customers, despite the limitations. No, those with a digital or online presence, and being able to quickly adapt to the new consumer habits that came about because of the pandemic.
Thank you for that, Toby. Paul, how about you?
I think the I think the challenge was to adjust to all the form factors that lends itself to online. So everyone talks about the future of work, right? And everyone had plans to switch to future of work form factors, and then overnight, I think March 15, 2020 will forever live in infamy when uh, those who did not adjust. So I had a lot of friends, they had to close down their businesses. Uh, for me, ironically, I just started a few businesses, so it was very challenging, especially with the government. Like approvals took a lot of months. So like what Toby was mentioning, uh, if you didn't have a war chest at the start, you didn't have dry powder or war chest at the beginning of this pandemic, then you would probably be one of the collateral damages, casualties. But I think that lesson will be forever ingrained in many of the business owners, the importance of being prepared for something, even what everyone thought was a black swan event, even though apparently, like Bill Gates and all these other pandemic experts actually have been modeling this for many years.
Thank you for that, Paul. Roland.
Yeah, I think the pandemic really rewired the DNA of a lot of all businesses, both in the mindset, operations, and even the products and services. We were forced to do a lot of digital work streams, like questions like how do we do digital sales in B2B? As I always say in Embiggen, right? This company was built in Zoom. No, it's weird, but it's true, right? How can you build a company, a big business, right, over Zoom? And we really had to create the build, or to really follow the build, measure, learn framework of the lean startup. No, We build the service. We measure it through launching, moving fast, learning from it, and iterating the whole thing. So in Embiggen, I think it really forced us to think like a startup, and to act, talk, and walk like a startup, right? In the startup, in a sense that it's not the miniature version of a bigger company, but the DNA of a startup, which is innovative, disruptive, and fast, agile, right? Another thing would be it really forced, I think, not only for me but for leaders in general to think differently, to manage emotions better. There's a lot of wrong things that happened, and how do you motivate yourself and the team, your employees, co-founders, and everyone, right? Your ecosystem partners. How do you really still push on, right? Despite all these challenges that are happening. So along with this sort of leadership challenge was how do we think digitally? Because before we can even perhaps manifest the sort of digital operations, digital first sort of culture, leaders like us, right, would really need to sort of shift internally first. That yes, we can build a company digitally, and we really need to employ innovation methodologies, innovation frameworks, processes, and all those things. So, yeah, that's it for now for me, Mario. Thank you.
Thank you, Roland. So just to follow up on that, what were, if you can share, what were the most innovative strategies that you've implemented over the past 20 months that yielded the most positive or the most significant outcomes? Roland, let's start with you.
Sure. So, and this is not only for me, right? Obviously, we're an innovation consulting firm, but then we walk the talk, right? So, what this means, at least for Embiggen, was how do we build a formal innovation framework, even if you're small, right? Because we can't do hunch innovation, we can't do ego-based innovation, right? We need to do evidence-based innovation. What does the market want? What does the market need? And the build, measure, learn framework, and all of these sort of innovation methodologies that really build more value for the customers, internal, both internal and external, was really important in terms of integrating that in the process of Embiggen. So at least for the innovation step, right? That what we did was to really build an innovation process that can capture new customer experiences, right? Customer, the voice of the customer, and really how do we help our clients and corporations, because the mission of Embiggen really is to help progressive organizations in emerging markets, and we do that through building capabilities, right? So we had to build it internally first, and I do think that having an innovation process from within the company really helped us a lot during the pandemic. So yeah.
Thank you, Roland. How about you, Paul?
I think on the other side of that is I think we're now on the 20th month, right? Uh, and as Toby mentioned, people have stopped guessing already. So if you haven't learned your lesson and you decided to plan short term, then we'll see you again in in 6 months and see if you learned your lesson. But one of the things, for example, we do in Embiggen is we have like almost like a 4-day work week. In other words, we don't have any meetings on Friday, not even Zoom, because we want, number one, people to focus on deep work, things that are important but not urgent, right? And I was doing catch up with some of the people we were doing deals with last year, and we've lost. One of the companies, we lost a CTO because of too much migraines. I've lost another CEO, went on a 6-month mental health break. I was supposed to start a VC fund last year, and my GP basically checked out and said, "Paul, I need to check myself into see a psychiatrist." So, I think people need to understand we are dealing with a very different beast, and now we are seeing the effects. Right, 20 months in, we've now seeing this pandemic can break people. if we continue doing the same things. I've had colleagues before. I didn't understand before, like I could see their tweets, no, but it's protected from their employers. But I could see them because they're my friends, and they would have meetings up to midnight, and some of them have families. So what happens is you have your wife and you have your kids, and you're doing online at the same place, in a place where you really didn't have you didn't really build a place where you can have three online meetings at the same time. So if that continues like 6 months, 12 months to an end, it will really break your family. So I think one of the lessons here is the paradigms we have formerly pre-pandemic, where we could afford to relax and take our mental health for granted, vis-a-vis our normal life and our corporate life, that doesn't work anytime, right? And you will see the after effects of this even now, as corporations, you notice this, right? If a company tweets, uh, we will now require our employees to come to the office, there are recruiters waiting for the employees of that company, because they will now switch to the company that's the competitor, that has work from home facility. So I think that's one of the big things in this particular season.
Thank you for that, Paul. Toby.
Yeah, I suppose that's where we come in, the good and the bad, no. Good is, as Paul mentioned, people really, suddenly realized how important physical and mental health is during times like this, no. I mean, what with the extreme amount of uncertainty, anxiety, and stress that COVID produced, no. So that was the good for us. No, we benefited from that, because sports and fitness equipment are our main line of business. But the bad was, it was still a problem. Being a retailer in the time of a pandemic is a struggle when you have 600 people on staff, and none of your stores are allowed to open. Um, and even for a time, even our e-commerce store, our online store, wasn't even allowed to operate. And when we were allowed to operate finally, with some vague guidelines that even the other marketplaces, the Laura, Lazada, didn't know what to do with. They all opened, so we all opened. I had to deal with checkpoints right in front of my office, questioning why people were coming to work when we weren't supposed to be, companies weren't supposed to be allowed to open their offices yet. No, so it was really a struggle in crisis management. But again, that's where the opportunity. There were also opportunities, because people were locked down, they couldn't go to their gym, and they needed to work out from home. Our team, really started to push the marketing, the campaign, stay strong indoors. No, and we wanted to own that idea that don't let COVID break you. You can stay strong even if you're stuck at home. And we had gear that could help them out. No, but the hardest part really for us was figuring out how to provide our usual service with all the restrictions. So we had to even resort to selling on Viber, Messenger, aside from our website. And we had to double our amount of staff for the website and for fulfillment. Again, we had to operate our e-commerce warehouse under the worst conditions, where we had to almost um, force people to come to the office to fulfill orders. It's so hard, and the government really didn't make it easy. No, up to now, it's very difficult. So it really rewards those who can find ways and think out of the box. And we've been trying to do that ever since COVID started. No, but I think there are a lot of companies who are more prepared than others. Those who did not have an online presence prior to the pandemic are really playing catch up now. And it's hard. It's hard to build in such a short period of time. No, we were just a little luckier that we started well before COVID happened.
Yeah, thank you for that, Toby. Actually, that was supposed also to be my next question, but I also want to ask your thoughts. despite the pandemic, we actually saw all these, home fitness companies saw a huge increase in sales, with the likes of Peloton, recording their first ever quarterly profit. Do you see this as a trend moving forward on how health and fitness will actually go as part of a need for people, especially now that I think the world is transitioning into a more remote setup where people can work from home and then at the same time people can work at the office, having that hybrid setup.
Yeah, I think again, what happened really teleported us 5 years into the future. No, changed a lot of things. The way people shop, the way people pay for things online, the way people exercise, the way people engage in sports and fitness, which are now a lot virtually also. No, since you can't play in person and work out in groups. So it's definitely led to a lot of Peloton, Mirror. Those are just two examples of startups that have really were at the right place at the right time. Um, but I think there's so much opportunity in that space still, no, moving forward. Because one thing that we've tried to observe over time is, people really do change the way their habits change over time, not just their consumption habits, but their lifestyle really changes over time. So I think the big plus now is that so many people are so much more conscious about their physical and mental well-being, and I think that alone is a has led to a lot of new opportunities in the space. No, whether it's a service, a product, a consultancy, outsourced services. There's so many ways to capitalize on that sports, fitness, and wellness demand.
Thank you, Toby. So, Paul, Toby said that the COVID-19 pandemic accelerated, our digital adoption by almost 5 years. As I also shared in the report earlier, in Asia, that figure is actually 10 years. Uh, and this is probably one of the reasons why venture capital is at its highest, with levels at record-setting deals. Why do you think is, despite that, are there also other factors to consider why VC funding has actually reached record levels this year? And what opportunities are investors seeing right now because of the pandemic?
Yeah, you have to go back. Remember, Democrat candidate Andrew Yang was running for president, right? And he actually went out of the race February, and then the pandemic hit March. So one could argue he probably had a shot, right? He had enough money for 1 month. He probably had the shot of winning that primary because he was the champion for the universal basic income, and basically I think U.S. President Biden took to heart the fact that Andrew Yang moved the Overton window about the discussion of giving Americans $1,000 a month, right? Because number one, Alaska already was doing that, right? They had dividends over their oil earnings for many years. So I think what happened was, so imagine a whole country when Biden became president, suddenly they allowed stimulus checks, right? They call it the stimmy. So imagine the whole country now was flooded with money and they don't know where to put it, right? Because remember, the stimmy means even if you're unemployed and you were on welfare, you still get it, right? So imagine so much money flooding the country. So that's one thing. So uh, the UBI discussion in the US has changed that discussion forever. In other words, now that a national experiment, like for a country like United States, I think other countries will now look at that model and how it affected this huge just flood of cash in that country. The other thing is the Jobs Act by Obama, basically in March 15 of 2021, a year exactly 1 year later, basically they changed the rules of the game in terms of how Americans can invest in startups. So prior to that, you needed to be an accredited investor to start invest in a startup. That means you need to have a net worth of $1 million, and you should be at least making $200,000 a year to invest in a startup, even like $10 or $100. So the joke was you can gamble $1 billion in Las Vegas, but you can put $10 in a US startup, which was crazy. So in March 15, 2021, The Jobs Act, basically with the new changes, allowed crowdfunding via FINRA regulated crowdfunding sites like WeFunder, Republic, Fundify, Fundvestor. You can now invest $100, minimum $100 to how much amount you want into any startup, even if you are not an accredited investor. So imagine that in the US, before that rule, only about 8% of Americans could qualify as an accredited investor, and a lot of them don't even know they're an accredited investor. And basically, this opened the floodgates, right, for companies. So this is what Winston Damarillo of Talino Venture Labs is doing. Basically, you register a Delaware Corp via Stripe Atlas, via Jumpstart Filings or Firstbase.io, and then you open an account with Mercury. And then if you raise your friends and family around maybe $100,000 for $20,000 to $30,000, you can start raising up to $5 million a year via crowdfunding. So so what's happening is in Philippines, right? Most of our funding comes from Singapore, or the funds are organized in Singapore, right? And normally that's the strategy, right? We'll say, hey, incorporate in Singapore because the funds in Singapore. The change now, with that new paradigm, it makes more sense now to actually have a Delaware corp, right? And now get funding. And the weird thing was, even before all these things, if you notice the forums, Filipino companies we're now talking about setting up their online companies in Delaware Corp, right? Because they can now use Stripe, they can now use Shopify, right? So DTI said from 1,700 online businesses, there were now 88,000 businesses, and they're like BNRS 381% increase in online businesses. So that was crazy, right? So imagine all these things happened. Then AngelList came up with the ability for venture capital to raise money publicly via the rolling funds. They now have a roll up of ventures. So all of this technology, like everyone mentioned, it kind of teleported us 5 years into the future, because maybe they were planning to do this like maybe in 3 to 4 years, but now you have to do everything online. I became a VC online. Basically, I became an LP via a tweet. And then I accidentally start a VC via a tweet. I've never met my general partners in person. Most of them we just meet through Zoom. So I think all the, what do you call this, all the limitations that was there maybe artificially before, we need to meet in person, you need to fly here, we need to do this, all that fell away during this season. And then when you add the fact that tremendous amounts of cash, in the trillions of dollars were unlocked through all these circumstances, now we're in this situation where there has never been a better time to start a startup and maybe a corporate venture fund than today, because there's just so much cash in the system.
Thank you for that, Paul. So, Roland, going with Paul's point, we have a lot of cash. But at the same time, Embiggen also came out with a report talking about the future of corporate innovation in the country, where you shared insights about the state of corporate innovation in the country. So, with the insights that both Toby and Paul mentioned, what's the current state of corporate innovation in the country, and how does this massive, inflow of funding also help corporate innovation move forward?
Yeah, good question, Marion. So corporate innovation in the Philippines is really at its infancy. So I think in terms of time horizon, we're at least 2 to 3 decades behind more mature sort of digital ecosystems in the world, like Berlin, Silicon Valley, right? Even Singapore. In the Philippines, for example, specifically in the Philippines, right? Like only less than 1% of corporations have a formal innovation framework that they follow internally, right? Like for example, things like, when do we decide? So, for example, do we have a formal ideation session, right? Do we have an innovation officer specifically for innovation? Do we do, for example, outside funding, right? Do we work with startups or external sort of partners? Do we employ the ecosystem strategy? Things like this, no? Um, and even in terms of innovation performance, right? Innovation performance is measured in four ways. The first one are empowered people. The people know the lean startup methodology, which is sort of like the tactical approach to innovation. Does everyone know business model design, value proposition design, those things? Another thing would be to measure innovation performance is having innovation work streams, right? Can the innovation teams work with the core business equally or easily for that matter? We're also talking about data strategy, right? And two other things. But at least here, people are just starting to think of it, right? Toby and I had a very long conversation about this also with their board, and I do think it's a good step, at least at looking at it in the ecosystem approach, right? That okay, we need to have innovation in our DNA, and Toby is one of the people who really is advocating this. And even how do we work with startups, right? How do we invest in startups? Just the same, right? Only a few, I think, conglomerates have a venture capital arm, like a corporate venture capital arm that really, as part of their innovation strategy, I want to have an open innovation strategy where I interact with the sort of the existing ecosystems, not only here in the Philippines, but we're talking about Israel, right, which is a startup hub. We're talking about Berlin. We're talking about Silicon Valley, of course, Singapore, right? How do we sort of interact, participate, and give, money, invest a little bit, right? Not a lot, right? A little bit as part of our innovation strategy that can complement, our services, our products internally, right? So largely, we see in the Philippines, it's still in silos, right? Corporations have their own thing, the academia has their own thing, right? Which, like historically, the academia is sort of like the more innovative institution where have a lot of ideas, and of course the government. In Singapore, for example, right, they have this new program in co-venturing, right? So they built this program where corporations can build startups with entrepreneurs, right? And the government co-invests in that startup, right? And even gives tax incentives to corporations who co-venture with startups, who partner with startups, right? So sort of obviously Singapore's sort of more advanced in terms of their innovation startup policies. In the Philippines, we're getting there, right? There are talks of the formation of National Innovation Council, directly in Malacanang, right? But then those are just conversations that are starting, right? Which I think is a very big opportunity for corporates to really look at, right? How can we hire invest in entrepreneurs that can maximize our current portfolio or our core business, right? So where there is a problem, right? There's a lot of opportunity. In this particular case, corporations who will pioneer this movement in the Philippines will really reap a lot of benefits. I think in the next few years. So yeah.
Thank you, Roland. So I guess this is for everyone. Is there a specific startup that excites you? Whether it's a local one or a global one, is there any startup that excites you right now? Let me start with Paul.
I think obviously the startups I advise are the ones I'm excited about because I'm invested in them, right? So right. So but I think like to Toby's point, right? The main issue I think that everyone realized during the pandemic is logistics. So even right now, if you look at Paul Graham's tweet and the Flexport CEO, that's their main problem now in the US, right? Their problem is weird, man. I mean, they have all these container vans, and because according to their state or ruling, you can only stack container vans, two container vans high, and basically now there's a backlog of a few hundred thousands of container vans, and basically the global supply chain. The weird thing is we're all dependent on this global supply chain is stuck somewhere in the US because uh, someone forgot to upgrade the statute, right? So what they were saying is, hey, why don't you approve that the container van will go up up to 6 container vans and clear all these things, right? So anyone who solves the problem in logistics, especially now, where we understand now where we're all very vulnerable, will make a lot of money. So some of these are hyper local. So a lot of uh, Toby kind of mentioned that, right? If you're crossing between cities during the pandemic, you can't even cross, right? I mean, you have a checkpoint in front of your office, so you can't even go to your office. You can't even go inside another city, right? So there's an emerging idea of hyper local, even e-commerce, creating hyper local supply chains. We kind of understood, right? Even our PPEs, even our vaccines, right? How dependent we are at what we call the generosity of other countries. So, in other words, if other countries are not generous to us, we would actually die of of the pandemic. If we really think about it, if there was no COVAX program, we won't have any vaccines, and we'll be, I don't know, develop the vaccine from scratch. So I now we understand the value of logistics and how the people working on those startups are the ones who will actually reap a lot of benefits. So I think startups working on that, like, we're working now with Shipmates, that app, anything that talks about, like, anything like Flexport and all that, all the logistics type startups. I think they're the ones who will really get a lot of funding, because it really moves the needle.
Thank you, Paul. Toby, how about you? I mean, we also talked earlier about how the prevalence of new health and wellness startups also came about during the pandemic. Are these the startups that you're also excited, or do you also have another, like in Paul's case earlier, logistics companies also something that also excites you? Toby, you're on mute.
Okay, sorry. Well, in our case, we can really relate to the situation of traditional businesses who really need assistance now, or services that will help them level up their digital competence immediately. Whether it's software app, or an outsourced service, or even just a consultancy, to help them really capitalize on the new consumer preference for an omni-channel experience. Buy it anywhere, anytime, and pick it up anywhere, as quickly as possible. As near as possible to what Paul mentioned. Yeah, fulfillment. In our case, would be the easiest kind of fulfillment. Would be straight from one of our 65 stores, and pick it up there, order it online and pick it up there. But even that's not easy. It takes a lot of IT, and advanced software to get that done. No, so I think that's a really big opportunity for startups, or new companies to provide solutions to help traditional businesses. Create a true omni-channel experience, especially in the Philippines. I think we were caught a lot of businesses were caught flat-footed, simply because we had millions of people in the mall every day. We were spoiled that the shift towards e-commerce was not happening as quickly as it was in other countries. But the operative theirs was, no, and it really has happened since COVID started. Fast forward it 5 years into the future, maybe 10, as you mentioned. So now everyone and their lola is buying online and using digital payment methods to pay for it. No, um, yeah. So even now, even before COVID, I wasn't using the likes of GCash, and now everything I pay for those digital payment methods. So I'm interested in I think that's something that we can relate to, and can bring value added to help startups figure out what solutions, what pain points, whether retailers or other businesses have in terms of adapting to the new digital requirements of customers. And then, of course, the sports, fitness, and wellness space. No, there's so many trends there. Even the esports space. No, I'm a gamer. My sons are gamers, so we play FIFA and 2K all the time. No, so esports is a legitimate sport in my opinion. And as it becomes even more advanced and incorporates actual actual physical aspects, siguro, it will really bring the best of both worlds together, and that's a really exciting thing. My dream is to somehow be involved in something created with the ingenuity and creativity of Filipinos, that can be sold to a market globally. We don't do much manufacturing, but I think in terms of IT software, or I think we have the capability of doing something. Just a matter of finding the right field.
Thank you, Toby. Roland, how about you? You also work with a lot of startups. So,
Yeah, recently I've been reading a lot about DeFi, right? Decentralized finance, also because of Paul's influence. For me, he's really heavy in the blockchain, right? NFTs, metaverse, those things. And actually, one of our clients, um, who's a big insurance company, right, wants to explore products and services in the metaverse. So I'm really excited about that. So I was reading more about it. There's a lot of investors all over the world investing in blockchain DeFi. It's sort of like the internet 3.0. It's kind of like when the internet started, right? It's, I think, restarting again, which is where a lot of billionaires really came from today, right? So it's really exciting for me to look at those things. Another thing is the future of work. So there's this startup that mimics the physical sort of workspace, right? Because we know that a lot of corporations, and this is not again just in the Philippines, and as what Toby was mentioning, right? It has to have a potential for a global footprint, and that's where they want to play, right? Esports, one of them, and all these things, right? So, no, I do think the future of work startups has the potential to really scale if they find babalik pa rin ko na, usually in the startup role, it's product market fit, right? But in my head, it's really how do we find a market fitted product for the future of work, right? Everyone, whatever your vertical is, or whatever your industry is, the work sort of vertical, the future of work vertical is here to stay, and it's going to evolve more and more in the coming years. So those are the two things that I'm really looking at, working on, and even sort of launching some services inside Embiggen to really do that. So yeah, so blockchain consulting might be in the horizon the next few years. DeFi. So we'll see how we'll do that for banks, right? And even real estate, right? You can buy digital real estate. So how are you able to do that, especially if you're a real estate developer in the real world, right? So so those things really excites me, piques my interest.
thank you, Roland. So, I'd also like to ask you again, Roland, what value does working with startups bring to corporate, whether it might be investing or working in partnership with them?
Yeah, I think it's very simple, no. So it's really accelerated innovation. It accelerates your, if you already have your internal innovation team or internal innovation process that's formal, it can be slow, right? Sometimes for more corporates, so it might be they feel that it's expensive, right? And for some, they feel that it distracts them from their core business priorities, right? So the lowest hanging fruit, no, if you have a formal venture capital arm, really for corporates, it allows access to new ideas, right? To new ways of thinking and approaches that enables corporations to really, leverage their current resources, their assets and technology, right? Because corporations have very deep experience in the vertical, right? For example, in the case of Toby, it's retail, distribution, sports, right? Very deep experience. For a startup, who wants to be in those verticals that Quorum and Toby Sports are really experts on, right? They can leverage on the expertise of Toby, but at the same time, like for example, if Toby would perhaps invest in a supply chain startup, right, that can solve their problem, right? It not only gives them leverage to solve their own internal problem, but also sort of participate right, in helping other businesses that have the same problem, right? And obviously, the financial upside, if it has the global potential or at least the regional ambition of the founders, right, will really help in terms of not only brand equity, but also increasing shareholder value, right, for the board, for everyone who's inside Quorum, and even if it's integrated right into the mothership of Quorum, right, it really builds another second wave of innovation culture, right? And I've seen a lot of corporations have this. They invested in the startup, they integrated some of the best practices of the startup inside the company, right? And it really reinvigorated a lot of their people. People are excited again, right? People want to, be in innovation, right? So those are really clear sort of case studies that I've seen. So it's really one thing in my head. It's really accelerating innovation within the corporate.
Thank you, Roland. So, Paul, as a follow through on that, Ayala's Kickstart Ventures invested in NextPay, and then MegaWorld's Agile Digital Ventures invested in Picaroo. How do CVCs benefit from investing in startups? What would be your thoughts on that?
Well, the one way to see is when you bet on startups, right? The basically doing 1x, right? Anything you make an investment in anything, whether internally or outside, it's 1x, right? You're investing at 1x, but the upside is it can go to 100x, 1,000x even, right? So we knew that even inside idea space, we invested in coins.ph, right? Then it exited at $72 million. So that's one of that means the idea space basically benefited from the upside of coins exiting that particular transaction. So that's the opportunity uh, from a monetary basis, right? That if you want a return, if you want to convince your accountants, then you're probably going to invest anyway in things, right? So the joke is, right, there was this interview where Elon Musk, right, said, are you gonna give dividends for uh, Tesla, right? And basically said, giving dividends is like cresting the hill, right? You do that when you don't have any more improvements inside your company that you want to do. And basically, he said, we're not going to run out of improvements that we want to do internally by a long shot. So, uh, so there is a company in the Philippines where they had a 6 billion revenue and basically they did a 3 billion dividend. So when you think about that, I said, what, you run out of ideas to invest in. So it's also a signal, right? That's another way of looking at it. It's a signal also. If you're just giving away dividends and you're not investing it, right? Aside from, obviously you wanna give back to your stakeholders. Right? PLDT is known for that. They will always make a dividend. But on the other hand, if you did that and there was no new things coming out of your company, then it also sends a wrong signal to the people investing in your stockholders. So doing that also is innovation is actually a signal. Also, your risk management profile. You want to take risk in up and coming companies. You know their adage like keep your friends close but your enemies closer. So you never know which startup is gonna kill you, right? So if you invest in a startup, you at least invest enough, you get informational rights, so you know what's coming, and then at least you're nice to them enough that if you do want to acquire them, you already have a relationships. Otherwise, they might just end up killing your company eventually, right? Especially that startups have very singular focus, right? They focus on one thing and they do that very, very good, and you can end up being innovated away out of existence, right? So aside from the monetary, the signal, and aside from the fact that uh, it is an existential imperative for your company probably to do that. Uh, it's also what they call this, it will also like you say, it's an ecosystem play, right? It creates more jobs. Startups, basically every company, when you think about it, if they started from an original idea, they probably were a startup once, but maybe they lost their, once you become a big corporation, you get 1,500, 1,000 employees, you lose that vibe, right? And I think investing in that, you go back to investing in the economy and also helping your company, as Roland mentioned, like going back to your first love, right? Meaning it's all about solving a problem and not about corporate politics, right? And all that stuff that corporates sometimes end up messing around with when they should be focusing on better things.
Thank you, Paul. Toby, to Paul's point, you also technically have a startup because Runner was your brainchild, and even Urban Athletics was your brainchild. How did you navigate? How was the synergy between Runner, Urban Athletics, and Toby's, and how did that dynamic work? Because Runner and Urban Athletics are technically your startups, and then Toby's is a more established brand. How did that dynamic work?
I think that really proves a point that Paul was making. No, to be honest, we just really wanted to do something new and create something that we thought, or we weren't sure actually, that our customers would like. But I personally, in the case of Runner, I personally saw the value of creating a new kind of experience, no, a new kind of store that would convert people who've never thought of going into running or becoming a runner into an avid, passionate runner, no, with a totally new lifestyle, no. Um, so I think, yeah, exactly what Paul said. No, we started things because we thought it was cool to do so. No, and but that in that case it was a bit, or very organic in a sense. But even then, we didn't know it would succeed because the share of our running business to our total business was less than 5% at the time, no, in 2009. So who would have thought that running would boom all of a sudden like it did in 2009, 2010, no? But we found the concept. I really believed in it because I became a runner myself. So it was all about creating a new customer experience and segmenting the customer. No, we found a way to offer customers something they didn't know that they wanted. I always look up to Steve Jobs for that mentality. No, they didn't know they wanted to become runners, and then they did. All of a sudden. So that's the best thing I like about starting up something new, and creating something innovative. But even in our field, the rate of innovation is so fast. I mean, all you have to do is look at Amazon, no? So the retail business and e-commerce business is it's on warp speed talaga now, no. But as long as the discipline that we want to impose in our company is to keep looking out for new ways to do things, new retail concepts, new sports, new fitness regimens, but also outside of our core business. Not just of course something related to our core would be a great synergy. It will help both ways, but even something outside of our core, as long as we see, again, like what I mentioned kanina, omni-channel business solutions, that's not really our core, but we can totally relate to the need. I totally see the need for that, no. But it would help us diversify as well, no, and then create a wider portfolio outside of just our core business. And whether we should have started that ourselves, I think that's a no-brainer. We don't know as much probably in other fields, so tying up with a startup who's really studied that field, or even has experience in that field more than we do, is the way to go, I think.
Thank you, Toby. So, Roland, we're actually launching this new service called Venture Capital as a Service, wherein we're helping companies, who might not have the capacity to build their own CVCs or invest in startups, build their own
Yep.
VC funds. What was the idea behind this? And how does this fit into our current innovation ecosystem and also Embiggen's innovation thesis?
Yeah, and I think VCAS is very simple, venture capital as a service, right? So in Embiggen, as we say, right, we help corporations and enterprises wherever they are in their innovation journey, whether that's they're just starting, whether that's building their innovation capacity to executing to co-executing it, right? And VCAS is under the execute part along with corporate venture building, right? But VCAS is really simple, right? So corporations, as I mentioned earlier, the hypothesis is that they want to accelerate innovation with whatever they're currently doing. And the lowest hanging fruit here to do innovation is to invest in innovative units, such as a startup. And earlier nga, diba, it has an effect to the culture, it has an effect to the mindset, operations, and all those things. But really, the idea is how can corporations invest in startups, number one, and how do they do it the easiest way possible, right? So they outsource this to Embiggen. Embiggen has the deal flow, which means the in VC terms, right? The deal flow is the funnel of startups to invest in, essentially, right? And because we do in Embiggen, right? Of course, we do have the global footprint. We do have are embedded in the ecosystems of startups from Chile, for example, to the Middle East, to Asia, to the US, right? So we do have footprint there, right? But perhaps some corporates might not have the access to, right? Nor the credibility even to say that, hey, you should go to me for investment, right? Another thing is the back end of venture capital, right? Which are the due diligence, right? And all these finance things, right? That you need to be able to do the legal part, right? And if you're an executive that's really busy with running the core business, you shouldn't have to even study these things anymore, right? So for me, it's having two things: access and the convenience. How do you make it easy, and how can corporations access innovation as soon as possible, right? So essentially, that's really the idea of venture capital as a service. And as I mentioned, more sophisticated, perhaps, or bigger companies who have the capacity to build their own venture capital teams. But for most corporations, they don't have that luxury yet. So what is the cheapest way to be able to do that? And it's through venture capital as a service. So yeah, it's essentially the idea.
Thank you, Roland. Toby, going back to you, staying innovative has been part of your culture for the past 43 years, if I did my math right. So, how do you see your innovation journey 43 years, in the future, and what role could startups play in that?
Well, at present, our journey as a retailer really started from humble beginnings. We started as a tiny toy store, and then grew into again a 60 chain, 65 chain store, 65 store chain. But now what's really driving our growth is our three online sites that we run ourselves, that we built totally new business unit for, because we treated it as a new business. Unlike others that said, we'll put up an e-commerce department, and staff it with a few people, and then maybe sell on Lazada and Shopee. We really decided that to be innovative as a retailer, we had to learn how to do e-commerce properly, and build a team from the ground up. But as a business, I think we really have to take that innovation further. E-commerce is so, and the next thing for e-commerce is really omni-channel, finding a way to integrate or make the shopping experience seamless across any platform. No, wherever the customer is, we have to be able to provide the service and fast. I think that's the hardest part, as Paul touched on in the Philippines. No, it's easy to buy stuff, but it's so hard to get it shipped and delivered on time, without any issues. There's so much more to do there. So any solutions, any way we can innovate that vertically, and or through finding startups that can augment that capability both internally and of course to provide that service to others. No, because we want to figure out ways to fulfill our mission, which is to help more people become champions through sports and fitness. And I don't think the only way to do that. I don't think just selling, goods in a store, a physical store, is the only way to do that. No, I'm sure there are other ways that that's being done already now, through virtually, or through the internet. No, and I really hope that there's more startup activity in the Philippines, in that space, both in retail and in sports health and wellness.
Thank you for that, Toby. Now, Paul, going to you. Venture capital is helping a lot of innovative startups in the country launch and scale. And corporates are starting to see the opportunities in the space. Do you think that corporate VC will grow in the Philippines? And what role could VCAS do in helping these corporates launch their own funds?
Yeah. Well, as well I mentioned, right? The two things, right? What the deal flow, and the due diligence, right? But you want to add also that part of that ecosystem, the network would be how to even know if that startups will work, right? So, and if you follow Michael Saylor, CEO of MicroStrategy, who's been investing in a lot of Bitcoin, uh, part of the challenge of if you're in the C level, right, is how to convert your corporate treasury into something that's not going to lose 24% to asset inflation. So I think before, people didn't really know that, and then when Michael Saylor started this series, every CEO was saying, "What am I doing with my corporate treasury?" Right? So now Vicas is probably, as well mentioned, that's probably one of the best strategies for you, right? You need a place to put your money uh, that will not melt 24% a year. So why not make a bet, right, in a huge upside, right? If you put your money basically in quote unquote treasury account, right? You basically, you don't even have a 1x upside, right? You have a negative 24% upside every, which is crazy. But if you put it in a structure wherein you're able to invest in startups, not only will it bring monetary gain to your company, but a lot of ideas, a lot of what do you call this? Your employees will also gain a lot of insight, right? And at the same time, it will probably affect your share price if you are publicly traded, or the value of your company in the long run. Then why shouldn't you, right? So I think now that people know these things, these were hidden before, right? People would quote like inflation as 2-3%, CPI, all these weird things that apparently is not really real, right? Now we now know the real value of asset inflation, and now it's also a challenge for corporate. So I think once people really know the big deal and their responsibility, not only to their stockholders or to the investors, of where to invest whatever is in their treasury, people will look seriously at VCAS as one of the possible ways to mitigate what to do, your cash strategy in the long term.
Thank you, Paul. And I guess this is going to be for my last question for this panel discussion. I think we're in a very unique position here where, in one way or another, we kind of started our own startup. And at the same time, we're established executives at different organizations. So I guess my last question would be, what advice could the corporate guy tell the startup guy in you, and then vice versa? And let's start with Toby. So again, the question is, what advice could the corporate guy in you tell the startup guy, and then vice versa?
I think, if you need inspiration or to figure out what opportunities there are, talk to the business owners with the most problems, and they'll tell you what they need. And there are many. You can talk to almost anyone right now. I'm sure they'll have problems that they can give you, several problems that they can give you, that you can start thinking of solutions for. No, I think this is a rare opportunity. I think a rare moment in time, actually, that businesses, even businesses who were doing well or were successful, are all suddenly caught caught by surprise, and they may be struggling to figure out how to catch up right away, how to compete against new types of players, and to adapt to the really drastically changing customer habits and expectations. No, yeah, I don't think there's a lack of opportunity right now. How we can do it locally, with our startup ecosystem here, and resources like talent and software engineers, etc., is a question they have to answer. But if the question lang is, what can I do, what products are relevant right now, talking to any business owner right now, you'll find many possible ideas. No?
Thank you, Toby. Paul, how about you?
Yeah, I think there is a what do you call this? The opportunity there is a disparity in terms of, for example, resources. So the corporates have a lot of resources, but the startups have all the solutions, the innovative solutions. Uh, Many corporates also have inertia working against them. So working with startups is a way to short circuit whatever. Well, inertia is, if you're in motion, you're in motion. So startups have that, but the corporates, whatever's at rest remains at rest. So corporates have that. So if the corporates want to move from being at rest to something in motion, then they can use their resources as a lever to the startups. At the same time, for the startups, right? I think the key there is aligning with the corporates, how they can actually help the corporates solve their problems. As Toby pointed out, there is no lack of issues and problems that any C level or even mid-level management is trying to solve. I mean, a lot of our consulting clients uh, that Embiggen has comes from even conversations. It's just dinner conversations. It becomes a chance for the C level to just pour their heart out, and they vent, and then okay. Many times we don't even know the nuances of those problems, right? And then, but once you talk to them, you realize, hey, maybe there's someone in our ecosystem that's already solving your problem, or they're already something that looks like your problem, and basically with a little tweak, that's something that can actually solve your problem. Maybe you partner together. So there really is an opportunity uh, here. It's just that the information probably just has to be shared in a better way. So hopefully, this kind of webinar under Philippine Startup Weekend will actually help corporates and startups together.
Thank you, Paul. And last but definitely not the least, Roland.
Yeah, I think Toby and Paul already said everything. But I think for both organizations, whether it's a startup, whether it's a bigger established company, actually each of them would tell each other to never stop innovating, right? And I do think that that mindset is very important, and the operations that come with that is very important for us to, if you want to see the light of day after, the new world we're getting into. Innovation is really, for me, the only way we can all thrive. So yeah, thank you very much, Marion, Toby, and Paul.
So yeah, again, thank you so
Thanks,
much to our
everyone.
distinguished panelists, Toby Claudio, Paul Bajo, and of course, Roland Garcia from Embiggen Consulting. So with that, I'd like to conclude by saying thank you again to the panelists, and thank you, Philippine Startup Week, for allowing us to host this session. So now I guess we will be opening the floor to questions. Thank you.
This is Brittany. She's been tasked with producing the company's next big event, happening in just a few weeks. The event technology options are seemingly endless. Until she found the perfect platform to engage and delight attendees. This is Excel Events, a virtual and hybrid events platform that has all of your must-have features in one place. From connecting attendees to brand exhibitors, seamless networking functionality, and custom ticketing options, you can manage the event ecosystem all from one place. Stream your live videos right on the platform, or integrate your favorite streaming provider so speakers can focus on delivering their message, while event managers are confident about delivering their run of show. Attendees can have direct access to speakers using built-in chat features. They can have one-on-one sessions with speakers or other attendees to create an intimate networking setting. Attendees are able to connect to multiple live sessions without ever leaving the platform. Create better events with flexible agendas. Native live streaming. In-depth analytics. Lead gen management. Multiple concurrent session functionality. Integration with popular software solutions. Learn more about Excel Events by visiting excelevents.com. Try it for free today and change the way you see events.
Your customers have bills to pay, essentials to buy, and services to hire. Make it secure, reliable, and hassle-free for them with PayMaya. PayMaya's payment solutions have you covered because now you can accept all kinds of cashless payments any way you do business, whether it's in-store, delivery, via mobile app, on your website, or even without a website. Plus, you can monitor your business growth on a single dashboard.
Nandoon ka at my lowest. Nung isa-isa na wala mga customers ko. Nung akala ko, pasara na shop ko. You gave me hope when all seemed dark and when I was lost. You encouraged me to look beyond, to go beyond, to focus on my family, friends, and blessings despite it all. Lahat yun, naitawid ko kasi nandyan ka sa tabi ko, nagpapaalala na kaya ko. So ngayon dahil sa'yo, mas matapang na ako to face any challenge. And now I realize what matters most. So thank you. Thank you for being there for me through everything. Nagbago man ang mundo, alam ko, kaya ko na harapin ang araw-araw na walang takot. Kasi you are just right by my side. And I can always count on you. Kaya salamat, ikaw talaga ang BFF ko.
Filipinos have struggled with the most essential facets of life, like health, education, livelihood, managing finances, and many more. Our country needs all the help it can get to manage its burden.
We want to maximize digital technology to provide solutions for real customer pain points. This is how 917 Ventures came to life.
The Philippines' largest corporate venture builder. We ideate, launch, accelerate, and scale new business ideas that have the potential to grow fast. Through our portfolio companies, we empower consumers and businesses to power through and emerge stronger every day, pandemic or not.
Our vision at GCash is finance for all.
Beyond financial services, GCash has become a super live app with over 51 million registered users.
Consulta MD is the largest telehealth company in the Philippines with over 1 million users.
Health Now is an integrator platform that brings health and care to every Filipino in one tap at the comfort of your homes.
With these healthcare solutions, Filipinos now have access to doctors 24/7 and get their medicines delivered on the same day.
And as we all strive to search for safer ways to go about our days, we understand how customers are starting to rely on online grocery shopping for their daily essentials. This is where PureGo comes in.
PureGo has become one of Metro Manila's top-of-mind grocery delivery services, with its best-priced grocery items from trusted brands.
Sparking a difference on ad tech, digital media, and creatives that helps brands create more meaningful connections with their customers by leveraging data and prioritizing the power of insights.
We at Rush offer an out-of-the-box solution that helps businesses start their digital transformation in the most cost-effective manner.
Rush and AdSpark's marketing, loyalty programs, and e-commerce solutions help future-proof businesses, prepare them for the surge of online shopping and transactions, and find their footing in the digital world. 917 Ventures continues to offer innovative solutions with the addition of 2 more portfolio companies. Enkiro, with its suite of artificial intelligence-powered products, and M360 with its multi-channel communications services. Our secret? We innovate for the people, not the prestige. We ideate opportunities, launch solutions, accelerate lives.
We are committed to build more ventures to further accelerate the country's digital transformation.
The future is now. The future is us. We are 917 Ventures.